Wake up, motherfucker.
Yo, what's up? What's up? It's a little bit windy out here, so hopefully you guys can hear me okay. I'm gonna do a quick update. Very quick update. So like I told you guys last time, go long on Monday morning. That was it was. Looks like hopefully you did that. And let's see. Here we'll put this banner up here. Multi-streaming on Kick and YouTube. So yeah, subscribe to GetCrack to me just in case, anything happens to the channels. There's a Kick channel too. You can go to. Looks like Eric did not sell the UwU. Yeah, I know. It wasn't the pump as expected because by the time we hit pre-market, oil was already on its way down. So that's why I was saying, like, get out, whatever you can in the morning. I know it wasn't as high as you wanted it to be, but too late. Unless you trade futures or something, you really can't do nothing about that. That's the problem. A lot of times these news pumps, they'll get dumped right away. Anytime you got a dump, it'll get pumped right away. Yeah, especially with commodities. Commodities is all heavily driven by news events. So yeah, don't expect it to last. However, let's see where we're at here. So I'm going to do the XOP with the volume profile. Hopefully you understand how I came up with this stuff if you watched the previous streams. The fair value price here, the point of control, is around 159 on the XOP ETF. You can see, like, we broke off here well above this range, this range that was made since 2022. We get all the way up until here. You break out. We had a breakout. Hopefully it doesn't fail like it did in 2024 or some other times, as you can tell. So I think this is durable. It can sustain, but the reason I told you to get out is because any news-driven event that pushes up oil is only temporary. Only temporary. Do you think we're going back to 44? No, it won't go back that low. The problem is, though, that you'll have to suffer here for a while. That's why I told everyone to buy down here, right? There's a reason why I told people to buy down here. Now you see it. Because then if you still held on to it, you don't care. But if you bought up here, you're kind of looking at this going like, uh-oh, is it going back down to where I bought it? Or maybe even below where I bought it. It's possible. Any of those things can happen. So when you do long term, you have to pick the right times to buy it. This is a better time than buying up here, just expecting a breakout. It could just come back, bounce back here, and then bounce back up, bounce back down, bounce back up, and you're just really not going to like that. It's a waste of time, right? So you take that money and move on and come back later. That's what the game is. If we look at XLE ETF, it's also another energy ETF. It looks like this, okay? It looks like this. So you got this range here, you get all this, and a lot of volume coming in up here. We're at the top right now. The fair value here is at 56 for XLE. Could it drop back down? Maybe. There's no guarantee of anything. All right, after we look at that, what I want to talk about is oil futures. Okay, you guys need to understand this stuff a little more. All right, so let's look at the crude futures. Look at the front month. This is the front. This is the front of the curve for futures, because this is the current month. Okay, now there's many months after this. So right now it's $82 a barrel for WTI West Texas Intermediate. Now I can look at the future and see how it's pricing out there. So people that are buying barrels of oil are buying barrels of oil in the far ahead future. So let's say I buy barrels in the summer of this year. Where it's priced at? It's priced at $76 a barrel. $76 a barrel. Okay, that's good. So it's not at $60, right? That was what JP Morgan said just before the war started. They expected oil to average around $60 a barrel. We are at 76 here on the West Texas Intermediate for this. Okay, so that's good. What you want to see is that this thing stays stuck here and not drop back down to 60. If you get dropped back down to 60, you're going to have a problem. That's what's going to happen. So let's look at what's going to happen in a year's time. So let's look at the future in summer of 2027. Okay, how about that? Let's look at July 2027. What's the price there? It's still at 66. See, it's still cheap in the future. So people, don't think this will last, and they're buying oil for next year perfectly fine. However, the longer this war lasts, the more issues this causes. So maybe 1 month down, then you'll know there's an issue, right? You'll know there's an issue, and that's what's going to cause the ETFs to go up and stay up. If this thing just goes back down to 60 again, that's the problem. Okay, let's look at Brent crude. So let's look at this. Brent. What's the Brent symbol? Brent oil. That's the UK market. That's where most of the world trades at, not the US oil prices. The world oil prices based in London. So what's that? Let's see. Blah 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 blah. Okay, BRN is at 87. Okay, BRN. Let's see how it looks in the future. Here, let's look at July. So 82, not bad. So the spread between this and the current month's contract is very tight. Okay, that means for the Europeans and most of the world, they expect this price to stay at 80. For the US, however, we're still, down like to 76. Okay, from whatever 80, whatever it was. Okay, let's do this. BRN minus this. Okay. Oh man. Okay, that's not it. BRN 1. Okay. Blah 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 1. So this is the spread. Okay, between now and the summer. The spread got widest over here. Right. Sunday night. Monday morning, $16, $17. Now it's down to $5, but it's still significant. Okay, at least the spread is still significant. If this thing starts dropping lower and lower back to 1, then you are going to get worried that anything you have in oil is going to drop. That's how you understand these markets. Let's look at the US, West Texas Intermediate. You do the same thing, right? CL, then I do. Okay, hopefully you understand what I'm doing here. See, so I do that. What's the spread here? Spread here is $5.86, 88. Okay, so you want this spread to widen back out. All right, if it widens back out, then you know it's sustainable. And then oil is going to keep future. You're looking at the future, not the present. I don't give a crap about what's happening now. I want to see if this thing does enough damage that people predict that oil will stay high. That's what it is, right? So I suspect if this is going to be like the 2000s, when commodities was very good, like oil, gold, silver were doing very good during that time. Those stocks went up 10 years to 15 years before the great financial crisis. So if that's what's happening, the AI bubble pops, everybody runs back to commodities, then we got 10 years of good times on oil stocks, gas stocks, gold stocks, silver stocks. So that's what it is. Any idea what caused the futures crash? Some say Trump, others expecting G7 will open reserves. It doesn't matter what it is. Anybody can spread rumors. So that means anything that's based on news doesn't last. News is fake because it's not a structural event, right? If it's a structural event that's actually permanent, I have to know exactly how long we're going to be in war, how long the Strait of Hormuz is closed down, how long those things are not in the news, because that means I have to predict the future. News events are just something that comes and goes and creates noise. I expected oil to go up, not because of Iran. It's just because structurally oil will have to go up, because once the global economy starts consuming all that oil, because right now China hasn't been consuming oil as much. That's why oil prices have been depressed. The other reason too is that China consumes oil on the black markets. So that's another reason it will be depressed, because if they get discounted oil, Who cares, right? About the open market. Open market prices are for people who actually obey the U.S. government's laws. Whatever. And the U.S. government is the world police. Okay, so that's it. Greece successfully went through because the Greeks are crazy. So watch my previous stream where I show like the guy talking about the Greeks. Yeah, the Greeks are crazy because the Greeks own a lot of shipping, especially since the Ottoman Empire. I mentioned that the Greeks from Thessaloniki and Athens, they drove the shipping lanes for the Ottoman Empire for many eons, right? For many years, they were very rich, so that's why they got genocided during the Turkish War of Independence, because they were grouped up with the Armenians and the small hats because they were the wealthiest of the wealthy class of the empire. So actually, you know, if you go back to history, the wealthy merchant class of the Greeks did not even want independence because they were happy with the Ottoman Empire system because they were getting filthy rich off of controlling trade. Okay, so that's it. China, India purchased oil black markets like 20%. Yes, that's right. That's right. They got discounted oil. Yeah. And Chinese are hoarding a lot of resources, including oil and all that. So that's it. Lithium is a new thing, so we don't know what's going to happen there. Lithium has looked like made a durable bottom since last year, since the Chinese have stopped dumping lithium all over the place and are restricting how much they mine now. So this allows the market to reprice lithium at a higher point. So yeah, so lithium stock that I like is SGML. That's one. There's others that we'll discuss sometime down the line. SGML is my favorite because I like how it moves. It's not like the best. Okay, the wind's coming in, so you don't hear me as good now. Yeah, it's not the most stable of lithium stocks, but when it moves, when it wants to move, it moves really good, because this is what I played in 2021 from like what, $10 or something, somewhere here, and then it went up to like 30, 40, yeah, somewhere around there. So I think it should make that kind of move again sometime down the road. Besides SGML, there's an Argentina one, Lithium's America. This one's the same kind of risk. It pumps and dumps like mad, but maybe when it pumps, it'll pump good. More stable lithium stocks, I guess, is another version of Lithium Americas, where it's not based in. Actually, maybe the one that's based in America is the more volatile one, and the one in Argentina is actually better. They keep changing their ticker symbols. It's really annoying. Lithium Argentina, LAR. So it's part of the same company, but yeah. So this one's a little bit more regular since it bottomed out in May. So it has a regular motion, but still, you know, it could still crash and burn. Who knows, right? But if you start buying it around $3, $2, $4, even now $7, and it flies back to 30 plus, that's good money right there. So yeah, we got that. Oh, let's see. Tesla needs batteries. People drive those ridiculous cars. If you're looking for batteries, there's a battery company that reported earnings pretty good. I don't have much time to talk about these things, but let me see. Did I put in this list or not? No, I didn't put in this list. I guess it's part of the old earnings list here. AMPX. This one just reported earnings. So last week was up 50-60%. Looking good here. So I might recommend it now. I think it's gonna break out for sure. So it started out around $10, that IPO. I think it was a SPAC company. That's why usually SPAC companies start out at $10 or $20 or something like that, a round number. And then it just crashed and burned here into 2024, and now it's like flying high again. So yeah, once we get out of this zone, we can go up. So AMPX, Amprius Technologies. So we got one. Another one was an EE or something. Era. Or was it something else? Maybe it wasn't this one. Edge. It had earnings. No. I don't remember. I'll have to look back at this some other time with you guys. But there was another one. It didn't do batteries, but it did infrastructure work. Oh yeah, Enphase. Maybe it was called Enphase. That's what it was. So you got the infrastructure one, and then you got the one that does the batteries. So you get both of them. This one, see, it made a nice bottom here last year. Looks like it's gonna hold it. Will it go back up to 300? I don't know, but I think this is a very significant bottom here. Yeah, this one looks good too. So I'm probably gonna get into this one as well. Okay, ENPH. Okay, that's it for that. I'm gonna give you the shipping updates now. Play you the video so you can see what the Strait of Hormuz says is going on. I can move on from there. I'll wrap it up. So nothing much to talk about. Oh wait, before I do that, yeah, what's up, Dancer? So this was a trade I made. I told you guys to get in the SOXL. Okay, so that was like 20 to something percent from the bottom of Monday, and that's it. I sold some yesterday at the end of the close. I sold some today. I mean, I think I'm pretty much out, huh? Yeah, I'm pretty much out. So I don't know what Oracle's gonna do tomorrow morning. It's up 10% last I saw, so maybe good things. But yeah, if you did SOXL, 20 or 30% would have been easy for you. You would have got that easy, right? So you sold your oil, bought that instead. Disappointments were MSTR, Bitcoin did kind of pop, right? But MSTR didn't really follow. So disappointing, this one, MSTR. And I used leverage too, right? So MSTU I was using, so barely a pop here. It was like bleh. Okay, 5%, and then it goes back down, pathetic. And then PLTU, so this is Palantir, same thing. Yesterday I got out because it was like all the software names were getting so weak ahead of Oracle. Apparently, it was just like, oh god, forget it. This thing ain't making it. So sadly, software didn't follow. Bitcoin stocks didn't follow. Bitcoin itself is fine. Bitcoin stocks were not, nobody was biting on them. So only semiconductors, everybody ran back into semiconductors again, which is ridiculous. I don't know why they keep doing that, but every time something goes up, it's just like, going back to semiconductors. Don't care how overpriced everything is. AI this, AI that. I don't care about AI software. I care about AI hardware, and come back to it. And you can see we're at the bottom of this range here, this profile. So we're at the top, we're kind of goofing around. If this thing just rolls back over again at the end of the week, then next week is going to be hell, because I don't know what kind of news is going to pump this anymore. They've been trying to pump it. Believe me, whatever they're trying to do here, they're trying to pump it, and they keep going back to the same little guys. Momentum, LITE, so optical. We got this favorite AAOI, which I talk about. I'm not in this. I just told you this was the stock I learned how to trade on, because it was the most volatile stock of all time, and it was a good practice stock. So if you want to trade on psychology, this is what it does. It just runs on hype, because it only has one customer that provides all of its growth, and that growth is just AI. So yeah, that's about it. That's all it is. So this is the hype here. All this AOI stuff, it's all about the hype, man. God. So momentum, yeah, you got that. Don't know if it's gonna fall or not. We're gonna see, but they keep pumping these guys again and again. Coherent. I think Druckenmiller is still in it. I'm not sure. Maybe he got out. Let's see what else. Teradyne, yeah. So MU, as you know, okay. That's it. SanDisk. See, they keep going back here. Keep coming back. They keep coming back for more. They're not. Micron is the only one that's going to report earnings. Micron is the only one that's left, I think, for next week, I believe. So that's it. Hey, yo, what's up? What's up, tough guy? Let's see. Oracle's basically the only one that gets the coming as use. But okay, let's see. Oracle right now. So the problem with Oracle is the spending. They always worried about that. This room they were tossing rumors out like last week about how it's not gonna they're not gonna make the data center with open AI as big as it was supposedly gonna be, and then later on they said they were gonna do layoffs like up to 30,000. I don't know what happened on earnings call. I didn't listen to it. So if anybody asked a question about if there were going to be layoffs, I have no idea. Layoffs would be good news, honestly, because if you're going to spend that much on data centers, you got to cut the fat out of somewhere else, and laying off employees is the easiest way to do that. So if there's any news coming down the pipeline that they're going to lay off, of course, that's easy. That's an easy way to pump your stock. You just say you have layoffs, and automatically your stock will go up 10, 15% more. So if it goes up 10% tomorrow morning, it's going to be around 161, 163, somewhere here. So this dashed line, which was an important place where it broke down, and you see we're below this range. So this bottom blue level at 155, top is 206, fair value is 194. So I can see that. I can see them trying to pump this thing back to 194 over the week. But if that doesn't happen, it's just probably just going to stay around here. Then watch out. Any bad news from Iran will just send this thing back down, and that's it. Nobody wants tech if oil goes back up to $100 a barrel again. I don't know. This is a dangerous spot to be in. If you look at Oracle from the past, see here, I go back to 2023 here. Most of the recent moves, right? The fair value based on just the volume profile is $115. So if this doesn't hold, we're going back to 115. Okay, and you gotta see it. If you look at most of the history of this stock, it hasn't really done anything much except for recent COVID times, right? So after 2019, then you start seeing this big move up. Most of the time, it just stayed fairly subdued. Okay, it just goes up nice and steady, and then all of a sudden you get this nice bubble. Okay, and that's why it's like, gotta be careful. This one got punished the most because the bond market did not like the way it was dealing with bonds. All right, so you have to watch the bond market. Last quarter, when it first reported, it didn't really affect the NASDAQ. But several days after, towards Friday, it crashed the whole markets because then the bond market was starting to buy up CDSs. CDSs are the, what is it called? Crap. I forgot the acronym. Let me see. What is this? Credit default swap. You remember credit default swaps? That was what happened in 2008 when all that started crashing the whole financial system. So that's what people were worried about, I guess. So it made some headlines, I think, or maybe, who knows. But it started crashing the the semiconductors. I guess because if they thought like, oh man, if these people are overspending and there's no customer base to finally fill in. Also, it takes some time before the data centers get online, right? You spend money now on infrastructure. It takes about 18 months later until that stuff gets online. So it takes time. By the time that happens, maybe it's too late. Maybe we have a different economic situation, and then people will say, oh, these companies like Microsoft, Google, Amazon, Oracle, these big players, Meta, Facebook, basically, they can't support all their spending anymore. So you basically spend ahead of what's going to happen. That's how these guys play. They always spend anticipating customers coming later. Build it, they will come type of mentality. In any other industry, that will be punished heavily. But because it's AI, people give it a pass, right? You know, for now they'll give it a pass. But if the economy goes down, it might not give a pass anymore. That's what it means by reflexivity. That's what George Soros said. You overpay for a stock because you believe in the future, right? Growth. If that growth doesn't pan out, you know, you get punished excessively then, because once that bubble gets popped, you start like underpricing the stock's value. So that's what happens. That's how people make a lot of money. That's how people make a lot of money trading, because they bet on people being too aggressive on one side and aggressive on the other side. These are the stocks where, you know, a person like Soros makes a lot of money. It's not going to be a boring stock, okay? Like a utility stock. Utility stock isn't gonna do this. So, or a Coca-Cola or a McDonald's. So that's where it is. Buffett isn't doing that. Buffett doesn't play it like that. George Soros plays it like that, and that's where you make the most money, is to play it like George Soros, if you can do it well, of course, and you time it correctly. Okay, so that's that. So let me review to you SOXL. Yeah, so SOXL is about 20-30% over the days, 2 days. So this is where we're at right now. Would you start going in short semiconductors, hoping that Iran news will take this thing back down, or if Oracle's bond market will shake things out in the next 3 days, just like it did last quarter? I don't know. That's up to you to decide. But here, I can give you this. Here, we can look at the SOXX ETF. So we have a lot of volume coming in recently, a lot. So that's why I set this thing to a volume candle chart. You can see like it makes the candles very fat when there's a lot of volume, so you can notice how significant they are, you know, compared to any others. And we've been having a lot of volume. Wind is coming in. So that's where all the things are coming in, and that's where you look and watch to see if this thing holds. So the top blue line, 344, fair value is at 335. If you look at the long-term fair value all the way back into this year, for most of this year, when we moved up to this next range, is 354. Okay, so you want this thing to get back up here, 354. If it doesn't happen at the end of this week, and then we go on to next week into the Micron earnings, then yeah, I would watch very carefully. Because if it hangs around this lower level at 336 and it goes around here too long, then it's very easy for it to be pushed down then again after Micron. So that would be next week, though. I'm outside. Sorry. I got to do this. I only have so much time in my life to devote to telling you guys what to do. So, okay. Yeah, rare minerals. If you want to look at something, you can look at underwater mining, TMC. TMC, yes, this was one of my favorites that I recommended people back in 2024. See, towards the end of 2024, it went down to 75 cents. So if you just aggressively bought at $1 and below, it went up to 8 because of Trump saying he likes giving this company like permits quickly, and we had some changes in the board of directors. So once it's done with this going sideways here, hopefully we can get it to $30 or something like that. You can't see the time frames. Yeah, I mean, nah. You guys can figure it out. Because I'll talk about it again. You guys can figure it out. It's okay. I've talked about this over and over, so we'll talk about the time frame some other time. I don't have time to get into that. But most of these are just long term, right? I zoomed out here on my 78-minute chart, so you can see it goes back to 2024. Okay. This is not for short-term stuff. Short-term stuff was only for SOXL. That was it. That's the only thing I talked about. SOXL. That's it. That's all I talk about. Short-term right now. As far as long-term, well, we'll have to wait for Micron to report earnings. And that's going to be it. That's it. That's okay. Done. Anything else? Ooh, any of the software companies? Well, we'll have to see how these other ones. These are the most important ones for the IGV. Okay, so we have AppLovin, APP. We'll have to discuss this some other time, depending on how IGV works. Okay. The bottom chart, yeah, mostly. Yeah, don't worry about that. It was all like 2024. That's it. It was only going to 2024. Yeah, I know. Don't worry about it. We'll discuss it some other time. We don't have anything to do right now. Okay, don't do nothing now. Anyway, Zscaler. Yeah, I know Zscaler, Okta. I know those stocks. Yeah, I'll look at them some other time. So I don't have much time to be discussing this. Just a quick update, telling you what I did. So oil out, stocks L now out, done. Cash, back to cash. Time to look for something else, and waiting for the next shoe to drop in the news. Okay. So hopefully we'll watch what Oracle does tomorrow. That's it. So again, all you gotta do is watch what Oracle does at that 160 whatever range it was. That I said, yeah, 161. Okay, if it's trying to make its way to 193, or it doesn't really matter what Oracle does. And what happens with the semiconductors as a result of that, or what happens with IGV. That's what. Then we'll talk about Okta, Zscaler, all those other ones. Okay, but right now we don't know. I mean, personally, IGV and Bitcoin kind of like go hand in hand, because if you put Zscaler and Bitcoin over each other, they're very aligned, right? You see, they have very similar correlations. I think it's because it's the same type of investor. They're looking at the future, right? So most of the investors that look for future growth things, like they'll look at software, AI, cloud, and then they'll look at crypto, right? These are the same styles of players that get into this stuff. So when Bitcoin started dropping, you could see IGV also started going down as well. It's the same type of people rotating their money out of it. We'll see if they're gonna come back in. I know that I've seen some tweets where they said like most of the people down here, they were just retail were buying this. You see a lot of volume come in, right? That's a ton of volume, massive amount of volume, and it's pretty much retail buyers down here. You can see like compared to all this. So I don't know what that says. I mean, it doesn't mean like retail will be wrong. It doesn't mean like retail is dumb money. Yeah, sorry about that. So you gotta deal with this. All right. Yeah, CrowdStrike already had earnings last week. Yeah, I've been watching CrowdStrike. I think CrowdStrike's pretty good. And let me see. And then now I'm gonna play my video. Okay, once we're done with this, let me see. Okay, blah blah blah. Set this up again. Okay. Yeah, I know you lost me. Yeah. I mean, the most important thing is I told you what I did, what I traded. Done. I'll review this again later, some other time, when I have a chance to do it properly. So, see QQQ. You see this thing area right now where like we've been staying at this bottom level here. We haven't made a return back to 623. Okay, so if this stays here too long into next week, yeah, I'd be pretty worried. Because I expected software to take over from semiconductors. If semiconductors goes down, software has to take over. But if both of them really crap out, and this is where Oracle comes in, how the market reacts to Oracle, then this will determine things. So yeah, CrowdStrike, very good. Yeah, it reported earnings, very nice. So it continued on its pump from making the bottom here. So I'll have to see if this continues. Man, is Akamai still relevant? I haven't looked at that stock for a long time. Is that still a relevant company? You think QQ is stagnant because of pushback on software? Yes, because semiconductors is the only one keeping it up. If semiconductors went down along with software, guess where the QQ key would have been? The only thing is Oracle is hardware. No, that's correct, but it also is kind of like their kind of like the punching bag right now of AI, because if they think Oracle can't keep on spending, then the other ones will follow suit, like Microsoft, Google, and so they kind of treat like that like a bellwether. That's what happened last quarter, apparently. Yeah, Palo Alto Networks, correct. PANW. Yeah, we'll talk about those some other time. Yeah, it would be the same time investor, AI, cybersecurity, crypto. Yeah, I would say that. Figure up 20% today. Did they have earnings? Maybe. I don't know. I don't know what earnings are left. Here. No, it must be news. There's quite a bit of volume here from this, so must be a bit of news. That's good. So a lot of these software companies, you see, they have the kind of similar shape, and structure to them. So it's good to have a significant bottom here for IGV, because the other ones will have to follow like that, and then we'll have to look at other cloud ETFs. Okay, anything else? All right, good. Okay, now I'll play the video. Hopefully I still have some battery left here, and internet's not gonna crap out. Okay. All right, Hormuz. Okay, go play this Hormuz.
March 10th, 2026 edition of What's Going On with Shipping. We provide an update on the Strait of Hormuz and discuss disruptions and global trade. I'm your host, Sal Mercogliano. Welcome to today's episode. So I got three things for you today. A little bit of a briefer video here because I do have to work and teach classes here at Campbell University. But I want to talk about three things. First, we'll do a Strait of Hormuz update for you. Second, talk about the comments that General Kane, the chairman of the Joint Chiefs of Staff, had at this morning's press conference regarding convoying through the Persian Gulf and the Strait of Hormuz. And then third, a release from the UN Conference on Trade and Development on the impact of the Strait of Hormuz closure and what this means for global trade. If you're new to the channel, hey, take a moment, subscribe to the channel and hit the bell so be alerted about new videos as they come out. First, I want to highlight traffic in the Strait of Hormuz. This is a live image of it brought to you by Marine Traffic. Marine Traffic is probably the best app, I think, out there for tracking vessels around there. You can download this on your phone. You can put it onto your computer. Marine Traffic doesn't sponsor me, but they're very nice to give me access to their platform, so I always appreciate Marine Traffic. There is a vessel right now running the strait, the KSL Liang. It is a Marshall Islands flag bulker. She is underway and outbound in the strait. Now, I want to highlight something here. If you look at her destination, it says China owner and crew. That is really significant. Reason I want to raise that with you is that is the exact thing we saw Chinese vessels do when they ran through the Red Sea against the Houthi in 2024 and 2025. I will envision that we're going to see the same exact thing again here in this case. The other thing I want to highlight to you is the spoofing that is going on. You'll see a lot of images showing you the Persian Gulf and the Strait of Hormuz. There was some talk about ships running through the strait, and you saw this kind of line of ships here lining up. Well, when you take a look at it closer, what you see here is just kind of a mass of vessels. It's kind of a mess. Same thing when you come over here, you get these big clusters of ships, almost look like a junkyard of ships kind of thrown together. I'll give you another one over here. This one is inside the strait. You see these kind of gaggles of ships. That is the Iranians throwing out electronic interference, and it's causing the AIS, the automatic identification system, to give false readings. So you have to be very, very careful about what is being broadcast on here. So when you look at things, and last night when all those ships lined up, everyone's like, they're running the strait. It's like, no, this is just spoofing going on. There's also a lot of people sitting there saying, hey, there's no ships in the strait, so ships have turned off their AIS and they're running the strait. Maybe, we just don't know that. We really have to wait and see the evidence on that before we can say that. All right, second, I want to talk about the briefing this morning by Secretary of Defense / War Hegseth, but more importantly, from Chairman of the Joint Chiefs of Staff. General Kane was asked specifically about the U.S. Navy and the mission of Central Command to escort vessels through the Strait of Hormuz. Let's hear what he has to say.
On the potential, if tasked to escort, we'll look at the range of options to set the military conditions to be able to do that. And then, like we always do with every potential mission, come to the Secretary and the President with both what are the resources required, what is the command and control required, and what are the risks, and how do we mitigate those risks. So we're looking at a range of options there, and we'll figure out how to solve problems as they come to us.
I have to say, I don't get a lot of confidence from that statement right there. It sounds like, based on what he just said, is like, we really haven't have a plan put together again. What I would like to have heard is like, we have a plan, we're ready to roll, we're just waiting for an execute order to do this. I mean, he's basically saying, well, we're waiting to be tasked, and then once we're tasked, we're going to take a look at what we have, and then we're going to figure it out. That doesn't send a lot of confidence to the commercial industry that, like, hey, the U.S. Navy, the U.S. military has a plan to open the straits and we can begin the resumption of normal trade. Understand, again, I've said this 100 times. I don't think it's the job of the United States to be the world policeman and shepherd commercial shipping around the world. I don't. However, the U.S. and Israel initiated this attack against Iran. We could talk about the merits of it all day long, but this is what has happened. And shipping locked up because insurance rates were not at a high enough level to deal with the potential damage. Now, we've seen the number of attacks diminish across the board. I went through the attacks to date in yesterday's video. But what we need from the administration here, particularly the U.S., is a clear indication that the straits are open and available for shipping. And that's going to require sending U.S. naval vessels through the straits. And so the problem you have is resources and the availability. There's only so many escorts that are with the Lincoln Battle Group. Those escorts have to rotate in guarding the Lincoln. They've got to be refueled. They've got to be rearmed. And if you start sending ships through the Gulf, then you're stressing not just those combatant vessels, but the logistics. And one of the big thin things behind the surface here, I don't want to talk about it too much, is the logistics to support this. It is at times, you know, a single point of failure, and that is a problem that the military has. Finally, I want to show you this publication just came out from the UN Trade and Development, UNCTAD, Strait of Hormuz Disruptions, Implications for Global Trade and Development, a 10 March publication. So I don't want to read the document for you. You can go ahead and access it and I'll have it for you, but I want to highlight a couple of key issues in it. So first, the importance of the Strait of Hormuz as a vital passage for world trade. 38% crude oil, 29% liquefied petroleum gas, 19% both liquefied natural gas and refined oil products, 13% of chemicals, including fertilizer. I think that is really, really critical there. And then you get down in the lower areas with containers and dry bulk just at 3 and 2%. We've seen the drop-off, 97% drop-off in the number of ships going through. So if you go back, look at the passage through the Strait of Hormuz on 27 February, 141 ships, drops down to 81 on 28 February, and then just 4 vessels on March 8th. So, I mean, again, a substantial drop from the February average of 129 ships. When you talk about disruptions in the strait, a lot of this is going to factor into Asia. If you look, and this is numbers from 2024 specifically, so when you hear the million barrels per day, a lot of people talking about 20 million barrels per day. A lot of that increase in number came from the shutdowns and the issue with the dark fleet coming out of Russia. But here, those 2024 numbers have 14.3 million barrels per day. 84% goes to Asia, and of the liquefied natural gas, 83%. Absolutely essential for Asia. This looks at oil shocks, daily oil and gas prices from 1 January all the way up to 9 March. We know that number is much higher. We're seeing a lot of volatility right now in the price of oil. It surged all the way up over $100 a barrel, fell back down. We're going to expect to see this very kind of dynamic shock to the system. The one in particular to watch, I would argue, is not so much oil right now, but liquefied natural gas, because there is no way to increase the amount of liquefied natural gas production out there. Very little alternatives out there that isn't at full or max capacity. Oil, we have strategic reserves, we have floating reserves. There's a lot you can kind of do with oil. I shouldn't say a lot, but there is some you can do with oil. There is almost nothing you can do with liquefied natural gas. So one of the key stats I think that comes out of this is this one right here. 1/3 of global seaborne trade in fertilizer passes through the strait, 67% of urea, and then they get into DAP, that's about 20%, and MAP, about 9%. The other region where you get a lot of this from is out of the Black Sea, and right now with Russia and Ukraine increasing their combat between targeting commercial vessels, the global fertilizer trade is at really a critical point. Who has access to this fertilizer and who's going to be hurt the most? Well, you can see right here, 54% of Sudan's fertilizer comes from this region, 36% of Sri Lanka's, Australia, 32%, and then you go down that list, Tanzania, Somalia, Pakistan, Thailand, Kenya, New Zealand, and Mozambique will all be affected by the inability to get fertilizer out of the Persian Gulf. Then they talk about the ripple effects, which can travel pretty far, and I think this is the aspect that most of us will begin to feel. So when oil prices go up, food prices go up, and you got this chart that kind of tracks that right along all the way from 1990 through the crisis of 2008, through the supply chain crisis and COVID in 2020, and we can expect to see a similar impact here. When gas prices go up, fertilizer prices often go up, and you can see that through the 1990 to 2026 index with those huge peaks in 2008 and again in 2021, 2022, and 2025, 2026 is probably looking to be number 3, if not number 2 in that list. Freight costs for shipping.
Okay, so I'm going to mention fertilizer a little bit here. And this so CF is, if you want to look at, okay, let me see, get this thing going. All right, okay, StreamYard's working a little slow today, but CF, all right, so This thing has been running since COVID. It's been in a range since 2022. Look what it's doing now, right? So yeah, I've been waiting for this moment. CF, this is your fertilizer stock. All right, let's get back to the video.
Historic highs. This goes all the way back to 2000, where we see tankers and clean tankers. Those indexes, we're seeing them come back up again. From the period at the end of really 2010 until about 2020, shipping prices for oil was pretty low, but now all of a sudden we've got this huge resumption in the price of oil. Again, this goes back to the quote I've given you a lot about the charter price for very large crude carriers, but also for clean tankers moving aviation fuel and diesel. And this is the one I think that's not catching everyone, but it should. And I mentioned it a little bit in the video yesterday. The cost of marine fuel is sharply rising. And not just the price, but the availability of it. And this is going to be key. If we do not have enough fuel, and more importantly, if the price continues to climb, that is going to be passed over. We're already seeing the major shipping firms adding what are called fuel surcharges to shipments, increasing the cost to haul containers, dry bulk, and fuel around the world. You could expect to see it on cruise ships and expect to see it manifest itself in almost every area. And then finally, they talk about that war risk insurance as it surged. So if you have a war risk premium of 0.25%, you may be paying, for example, $250,000 on a $100 million vessel. If that war premium increases by 100%, you're paying $500,000. If it increases by 300%, you're paying $1 million. And this is the big concern we're seeing right now with that escalation of war risk. And then finally, a quick examination here of borrowing costs, which are adding a new economic burden. We're seeing bond yields and their uptick since the military escalation. So, the increase in yields and the increase in bond yields is going to make borrowing even more expensive for countries. You see the example there with the countries in and around the Middle East. They're going to need to recoup that money, which means higher costs for oil, natural gas, all the exports coming from this region. So key implications and considerations, they really highlight 4 of them. First, disruptions in the Strait of Hormuz underscore the vulnerability of critical maritime choke points to geopolitical tensions and their potential to transmit shocks across supply chains and commodity markets. I can't not agree with that. This is one of the reasons good buddy of the show, Ross Kennedy, always talks about watch the choke points. When a choke point closes or gets pinched, it has an impact. I always use the analogy that the ocean transportation system is like the circulatory system of the world's economic health. And when you pinch off a major choke point, it's, the Strait of Hormuz is like the femoral artery in your right leg. Sooner or later, you either got to reopen it, or you're going to do permanent damage, or you're going to have to lop it off and cause damage that is really not recoverable. 2, reducing risk to global trade and development, including environmental risk, requires de-escalation and safeguarding maritime transport, ports, and seafarers. We've seen at least 14 separate attacks with as many as 11 merchant mariners killed or wounded, other civilian infrastructure while maintaining secure trade corridors in line with international law and freedom of navigation. 3rd, economic impacts globally and regionally will depend on the duration, intensity, and geographic scope of the tensions. This is why when President Trump says this is going to be 4 weeks or 6 weeks, it resonates through the global supply chain and the transportation system. This is why when USS Charlotte sinks the Iranian frigate Dina off the coast of Sri Lanka, it could potentially widen the war risk area. Continued monitoring is essential to assess evolving risks and potential impacts. Finally, number 4, socioeconomic implications for developing economies. Many developing countries already face high debt service burdens, limited physical space, and constrained access to finance. In this context, rising energy, transportation, and food costs could strain public finances, increase pressure on household budgets, potentially heightening economic, social pressures, and complicating progress towards sustainable development, particularly in economies heavily dependent on imported energy, fertilizers, and staple food. So UNCTAD tends to really focus on developing and undeveloped economies out there, but I will say that this will impact all economies, doesn't matter, developed, developing, or undeveloped economies. This is going to resonate across the entire globe. So why it's absolutely essential we get trade through the Strait of Hormuz back up and running, and the United States should be working, should have a plan, General Kane, to do that right now. I mean, we should have one. I'm kind of shocked we don't have one. I hope to think we have one. Maybe it wasn't briefed to the general, and there's someone deep down at Fifth Fleet in Bahrain or back in CENTCOM in Tampa, probably some, strategic sea lift officer working for NCAGs has the plan. Sal, I've got the plan. Well, we got to get that plan out of the hands of Lieutenant Commander Umpty Squad and into the hands of the decision makers, which I hate to say Lieutenant Commander Umpty Squad, my apologies. Need to get it in the hands of them and say, we've got a plan, we're ready to go, this is what we need to do, and get trade moving. Make that map on marine traffic moving like it was prior to February 28th. I hope you enjoyed today's episode. If you did, hey, take a moment.
All right, so this is the link. Okay, what's going on with shipping? WGOWSHIPPING on YouTube. All right, 1 hour. I got my hour in today, so hopefully you guys will survive the rest of the week. Remember, Friday the 13th. Also, tomorrow we'll have CPI report, so that might also mean something. So, I don't know what's going to happen with CPI, but watch that too. That's going to be a big deal. So far, we're bouncing right here between this weekly rising 40-week line. So good luck. Okay, we better get back in that box. If you don't get back in that box, and we just roll back over to end the week. Oh, down here. Next week, you better pray that Micron does something good, because I don't know. The next time we get some Iran stuff, I don't think this is going to survive. So, yeah, good luck with that. If there's a dip, see if the NASDAQ gets down to 534 for the QQQ. How about that? And let's see if you'll buy the dip there. But watch out for the dip, okay, if it's coming. Okay, right? Yeah, especially now when we got high inflation from oil, they're gonna really scrutinize that CPI tomorrow. All right, see you guys on YouTube. See you, Eric. See you, Ponder. Oh yeah, I saw that Xena versus Ben thing. Oh my god. All right, see ya.